we had a few issues on our side. Today we have with us Pavan Sharma, CA Pavan Sharma. He's a partner at BCL and he's been a speaker in the past. We usually consult with him when we have something to do to talk about related to budget, economy, and everything else, right? And given that we just had the budget come out last week, we wanted to discuss from a startup's point of view, from a business point of view, as to how the budget will affect you, as well as a little bit of discussion around economy as well, the current situation and everything around it. So given that Pavan comes with a lot of experience, we wanted to use his knowledge here to discuss anything and everything around the economy and the budget of 22. Please feel free to drop in your questions. We are picking up comments that are coming up as questions through LinkedIn, Facebook, as well as YouTube, wherever we are live right now. I'm Mansa. I'm a part of the marketing team here at PayU, and Upstart is our series where we bring in subject matter experts or thought leaders like Pavan here to talk about various topics. As today's topic, it's already economy and budget. We are covering that today. And without further delay, over to you, Pavan. Thank you so much for doing this with us. Take it ahead.
Thanks a lot, Mansa. Right. So let me get started. I'll turn off my video. By the way, glad meeting you all. Just turn off my video and get started. Right? I'll
Yes.
share my screen, Mansa. Please confirm if you can see it.
I will do that. I'll do that.
Can you see the screen?
Yes, I'm just bringing it up. It's up right now. We are off the screen, and please go ahead.
Perfect. So let me just turn off my video for a minute, please. Yes. Okay. All right. So thank you, PayU, for the opportunity. Thanks a lot, Mansa. Welcome to the session on India Budget 2022. So like each year, what I've done is I've made an attempt to bring to you the essence of not just the annual budget, that's the finance bill, but also the economic survey. The economic survey is announced a day before the budget, contains a ton of economic data, and I'll be touching on some of these key metrics to give you an idea of the direction in which we as a country, the Indian economy, is headed. But I've changed the flow this year. I've decided to cover tax amendments first. I've realized that that's what most of you here are for. The analysis of the annual financial statement and the macroeconomic outlook will follow next, right? So we shall start with the income tax proposals, move into the annual financial statements and the macroeconomics, right? So let's look at the tax rates first. There has been no change in the income tax rates. The rates remain the same as the last year. Of course, the two regimes, the old and the new, continue, and they are presented here on the screen. The new regime offers an expanded rate structure with the benefits withdrawn. The taxpayer has the option to elect either of these schemes, and this option continues into the next financial year as well. Corporate taxes, again, they have remained unchanged. There is a change in the alternative minimum tax, but that's for cooperatives, where they have been brought at par with corporates. LLP tax rates remain the same. Surcharge for corporates remain the same. And minimum alternative tax, again, remains the same with the option of it being zero in certain cases. An important matter of consideration, however, is surcharge. There has been a change here for the long-term capital gain. Now, as you know, long-term capital gain from listed securities is taxed at 10%. There was a request to reduce the long-term capital gains rate to 10%. It's currently 20% in the case of unlisted stock. Hey, give me a minute though. Mansa, there is some feedback from the participants. Some of them are not able to hear. Can you confirm that you're able to hear me well?
Yes, Pavan, loud and clear actually.
Perfect. Okay. Give me a minute.
Maybe this is for the participants. If you can just try adjusting your headphones or anything else, I think that will help, because we are able to hear Pavan loud and clear, and your presentation is also going fine, Pavan.
Perfect.
You can go.
Just stop me anywhere in case you're not able to hear
absolutely. Me. I will. Thank you.
All right. So coming back to the surcharge, the rate has been reduced from the existing 37% cap to a 15% cap on long-term shares, sale of long-term unlisted shares. So effectively what this means is that the tax rate would drop from 28% to 24%, right? The base rate remains the same, that's 20%. The surcharge rate has changed, right? So that's the change as far as tax rates are concerned. Other than that, everything else remains exactly the same as what it was last year. Now, let's look at the virtual digital assets, right? This is the elephant in the room, basically. The biggest tax change that most of them are talking about. There's the tax on virtual digital assets, or to use a slang, the crypto tax, right? So before we dive into the tax proposals, let's understand a bit of history on how digital assets and particularly cryptocurrencies, was viewed by the government. And there's an excellent piece in the Indian Express by Mehab Qureshi. This is on February 2nd, 2022. What I've done is I've tried to summarize the essence here. So in 2013, the RBI released a circular basically warning public against the use of virtual currencies. And in 2017, the finance ministry joined hands with the RBI to release a similar warning stating cryptos are not legal tender. Right? This was in 2017. Now, in 2018, a scheme was submitted by the Central Board of Direct Taxes, that's the CBDT, stating or rather recommending a ban. The chairman went as far as to say that it promotes black money, and that was in 2018. So the RBI issued a circular banning banks from dealing in cryptocurrencies, and that's when the prices fell sharply. In 2020, though, the Supreme Court lifted this ban, basically. So there was some respite. And in 2021, there has been a lot of movement. So a flurry of changes, and the finance minister mentioned that cryptos, unless issued by the state, would be banned. And when the finance minister says issued by the state, she is referring to, or when she mentioned this, she alluded to the CBDC, right, the central bank digital currency, which is part of the budget proposals this year. And in November 21, however, the standing committee recommended against a ban. So the stand softened, and they said that a regulation was necessary, but not a ban. Right. So this is the background, and here we are. Right now, the finance minister introduces a tax in the budget 2022 on any income earned from virtual digital assets. So it's important to note that the term is not cryptocurrency; it is any virtual digital asset, which will also include the NFTs, or non-fungible tokens, which have become extremely popular. A flat rate of 30% has been proposed, and this would be taxed under the income from other source head, that's 56, and this is brought into the definition of property, right? So any virtual digital asset now will be a property, and the income that you earn from its sale, and income meaning profit, and not the gross amount that you earn, the profit that you make from the sale would be subject to a 30% flat tax. Of course, there'd be surcharge and cess. No deduction would be permitted for any expenditure other than, of course, the purchase cost, and there will not be any set off of loss. Neither would the loss from the sale of a virtual digital asset be allowed against any other income, right? So it will be treated in seclusion, a flat 30% tax. The budget has also introduced a tracking mechanism through the TDS provisions. They've introduced the new section 194S, where the tax rate, or the TDS rate of 1% has been introduced, but this 1% is on the consideration. So while you'll be paying 30% on the profit, the buyer would be deducting 1% tax on the consideration. There is, of course, a threshold set at 50,000 for individuals and 10,000 in other cases. Another important point on this slide is the big question, is cryptocurrency now legal in India? There are different answers. Of course, I think some senior ministers have also come out saying this is a step towards legalizing cryptocurrency in India. My take is slightly different. The income tax law does not deal with legality or illegality or morality or immorality of your income, right? You have income, the income tax simply taxes it. Whether it is legal or not would be a matter of debate. It would be a matter of regulation, which will be taken up separately. For now, the income tax law is concerned with the profit you earn, and it will tax it at the rate that's now prescribed under the section 115 BBH. Now let's move on to the other amendments. The section 37 first, right? So again, a bit of history now. Section 37 basically deals with the way expenses are treated on the profit and loss statement of businesses, right? So if you are a salaried person, this may not be of relevance to you because this is under the head business profits. So again, a little bit of history. The Central Board of Direct Tax in 2012 noted that the Indian Medical Council had imposed a prohibition on any medical practitioner who take a gift or some travel facility or any sort of benefit, right, from pharma companies. Now, this was a practice. I put "was" in quotes. This was a practice, and the Indian Medical Council came out with this guideline saying it is now prohibited. Of course, pharma companies continue to claim these expenses as benefits, and this particular circular was challenged in the court, saying that it's a genuine business expense, we should allow it. There have been a lot of arguments in the income tax appellate tribunal. Some of these judgments are in the favor of the taxpayer, some in the favor of the government, and the government decided that it's time that we clarify this our position on Section 37. So what Section 37 says is that certain expenses would be permitted provided they are not related to an offense or prohibition under law. And now the scope is being expanded to its true sense, which now says that any expense for an offense in India or outside India, doesn't matter, as long as it's an offense, it will be disallowed. It will also be disallowed if it's a violation of any regulation or a guideline. So, for example, the Indian Medical Council's guideline clearly states that any gift is prohibited, so the expense also would be prohibited. We turn our attention to 43B now. Now, 43B is a strange section. What it says is that irrespective of the expense that you incur, unless you pay that expense, pay it in actual bank transfer, it will not be permitted under the income tax law. Now, the amendment has to do specifically with interest. And now, certain taxpayers started claiming deduction of interest by converting it into a loan or a debenture. Right? And the claim was that because you converted this liability to a debenture, it is discharge of the interest expense, interest liability, right? And they started claiming that as a benefit. So while they did not pay the amount through the bank, they converted one liability to the other and claimed the income tax benefit. And so the amendment in the budget this year clearly states that there will be no benefit allowed unless the converted instrument has been repaid. There's a small change to Section 40. Now, income tax is not allowed as a benefit, meaning you cannot deduct income tax to calculate income tax. However, some courts held that one part of income tax, which is health and education cess, given its specific nature, should be allowed. The government has clarified now that cess will not be permitted as a deduction because it assumes the nature of tax. Let's look at some of the relaxations that have been offered in this budget. Right? We look at deductions and extensions. And extensions specifically, we look at 115 BAB. Now, this was a special section that was introduced for manufacturing companies, where the tax rate was brought down to 15%, provided the company engaged in manufacture and the manufacturing had to commence before 31st of March 2023. Now, the COVID pandemic has led to some of these companies delaying the commencement of the manufacture, and so the government, and rightfully so, has extended this window to 31st of March 2024. Similar extension is provided under 80 IAC. Now, that's the window or tax window that the government offers to eligible startups. Of course, startups, as we will see later on in this presentation, have contributed significantly and will contribute even more in the years to come to the job sector, to wealth creation, and a lot more, right? I think India now is the third largest startup ecosystem in the world. So startups have been contributing significantly, and 80 ISE offers a 3-year window, 3 consecutive year window out of a period of 10, provided the startup is incorporated before 1st of April 2022. Now, the government has extended that period to 31st of March 23. So any startup incorporated in this period and recognized as an eligible startup can enjoy the benefit of this tax window. There is an amendment to 80 CCD. Now, this is contribution to the national pension scheme. What the government has done is brought state government employees at par with central government employees. Central government employees used to get a 14% tax contribution, right? 14% of their salary would be provided as a deduction under the national pension scheme under the section 80 CCD. Now, this 14% has been offered even to the state government employees. Now, the state government employees can also claim a benefit up to 14% when they contribute to the national pension scheme. Finally, an amendment to 80DD, one of the practical hardships that guardians of persons with special abilities face has been removed. Now, any premium that's paid for the benefit of such dependent would be allowed even if the annuity or the lump sum is paid during the lifetime of the guardian. Now, of course, provided that the lump sum payment or the annuity is being paid beyond the age of 60, right? The guardian should be 60 plus, and these annuities and lump sum payments begin, and the benefit of premium would be allowed under 80DD. So these are some of the deductions and extensions. We turn our attention to withholding taxes, the TDS provisions. We've already seen the 194S section, right, which was connected to virtual digital assets. There's a new section that has been introduced, 194R, that deals with 1% withholding tax on perquisites. A threshold of 20,000 has been offered here, right? So any benefit beyond 20,000 would be subject to a 10% withholding tax. Of course, if the benefit is in kind completely, then it is up to the person who's offering this benefit to make sure that the payment is made to the government, either by collecting that money from the recipient or payment from his or her pocket. There's an amendment to 206AB and CCA. Now, these were provisions that were introduced last year to deepen tax base, and TDS at 2 times the rate that is prescribed was promulgated for those persons who did not file their tax returns. Now, this was to ensure people took filing returns seriously, right? Now, if anyone with TDS, TCS accumulation of 50,000 or more has not filed returns for 2 years, the government said deduct tax at a higher rate, 2 times the rate that would normally be applicable. So the government, in order to deepen the tax base further, has reduced the 2-year period to 1 year. So in case the recipient has failed to file the return for the last year and aggregate taxes is beyond 50,000, the sections 206AB and CCA will get triggered. Minor amendment in 194IA, where the stamp duty value will be considered to compute the TDS amount. Earlier it was in there, it's been introduced, it was there in certain other sections. So the government has now brought all of them on the same page. And finally, there was a significant amount of litigation around interest on TDS. There was always a dispute about which month this began from. Now, the government has clarified that the order of the assessing officer would be final. Again, I would not be surprised, and this is in my personal capacity, I wouldn't be surprised if this amendment is challenged in the court. There are certain other amendments. I'll quickly touch upon them. A new section, a new subsection, in fact, 80 has been introduced under 139, which allows for updated returns. Now, the government realizes that in case of genuine mistakes, you should have the ability to update your return. The due date for filing a revised return, basically you file your income tax return, you identify a mistake. If you want to revise it, today you have a period of 3 months from the end of the year assessment, right? So before 31st of December is when you can make these changes. Of course, there's a possibility you may find errors after 31st December, but there is no way under law today to make these changes unless a notice has been sent by the income tax office to you. So the government has listed down certain conditions on the satisfaction of which the SC can, or the taxpayer can, file an updated return. The condition attached is that if this updated return is filed within 12 months from the end of 31st December, right? So say 31st December 2022, and from there 1 year, 23, the taxpayer has to pay additional 25% tax. And in case it is filed beyond 12 and up to 24 months, say up to 31st of December 2024, the additional tax goes up to 50%. So this is very good for those who've made, who were able to identify errors and want to maintain a clean slate. And they don't mind paying this additional 25%, because in case this is picked up by the income tax office, you also end up paying penalties, which could be significant. The exemption of an amount received under COVID due to the treatment of COVID-related, any health issue, or monies received by legal heirs in case of a demise, has now been exempted. Now, there was a press release in 21 itself, June 21, where the finance ministry clarified that these amounts would not be subject to tax. Now, this benefit has been extended, and formally introduced under law. The amount of benefit has been capped to 10 lakh rupees. We hope that this 10 lakh becomes a threshold of sorts, right? So if somebody receives 12, up to 10 is exempt, and only 2 lakh would be subject to tax. And finally, there is a minor amendment to a section 115 BBD, where Indian companies who are shareholders in foreign entities hold at least 26% receiving dividends, were subject to a 15% tax rate, a lower tax rate. And this was connected to the dividend distribution tax under a different section 115O, which was abolished in 2020. So with the abolition of 115O, this concessional rate made a little sense. So now that's been withdrawn, and the rate has been brought at par with the corporate rate of tax. So these are the major income tax changes. I will not be going into GST in detail. Most of it deals with businesses. I thought the income tax changes were significant enough to cover in detail. So let's turn our attention to numbers now, right? I'll not get into a lot of intricacies again, but I'll give you the broad overview of revenues, disbursements, and how the deficit is financed. Right now, we are slowly entering into the macroeconomic aspects. First, let's look at revenue. Now, India collects nearly 26 lakh crore, and this primarily comes from taxes. Now, out of the money that we collect in taxes, maybe GST, corporate tax, the regular income tax that you and I pay, customs and excise, close to 27 lakh crores is collected in taxes. The central government has to share about 8 lakh crore with states. So what it's left with is 19 crore, 19.4 crore, right? Now, this is the money that's available for its disposal. Now, GST is the single largest contributor, and nearly everyone, be it rich or poor, is contributing to this share. And this estimate seems a little questionable, seems less optimistic, by the way, because the finance minister, when she started her speech, she mentioned that the GST collection in Jan 22 was a record 1,40,000 crore. Now, considering even half of this number accrues to the center, the annual target would have been higher by at least 7%. So the numbers lower here, maybe the reality would be better for us. Now, the growth rate of tax has fallen, and this might be due to the effect of the COVID base year, right? So it's a base year effect. And the government expects to collect about 65,000 crore from non-tax revenues, and most of this money would be collected from the LIC's IPO that is proposed. Now, this is the collection, but how is this money spent? Right now, the government spends nearly 43 lakh crore. Now, out of this, 81% is towards revenue expenses, basically salaries, pensions, administration expenses, and 19% is towards capital formation. Right now, if you look at the split again, of the revenue expenses, the single largest share is towards interest. Now, India is paying nearly 9.56 lakh crore towards interest, which is more than our total GST collections for a year that accrue to the central government. Now, there have been minor increments towards defense, internal security, and education. However, there's a significant drop in healthcare, nearly 45%. And I believe this might be because of the base year again, because the government allocated additional funds for vaccinations, and now that's withdrawn. So a 45% drop there. Civil aviation has seen a drop of nearly 90%. And this is because of the government offloading the Air India, its Air India division. So they are saving nearly 60,000 crore, which has been allocated for other schemes. The good thing is that the government is planning a massive 80% increase towards the construction of roads in 2023. And this will indeed go a long way to create jobs, wealth, and connect India better. Right? Also, significant capital expenditure is planned towards BharatNet. That's the high-speed digital connectivity of internet in rural areas, and the capital infusion for BSNL. So a lot of money is being invested for the long-term benefits. Now the deficit, right? So if you see, the gap between receipts and disbursement is nearly 17 lakh crore. Now the question is, how does the government plug this gap? And the answer is through borrowings. Now the good news is that most of these borrowings are internal. So if you look at the first pie chart, the lenders basically are Indians, right? A tiny fraction of that amount comes from outside India. Now, if you look at the numbers from the viewpoint of primary and fiscal deficit, right? Now the overall deficit is fiscal deficit. That's about 16.6 lakh crore. And that is 6.4% of the GDP. And if we add 4% limit that is placed on the gross state domestic produce, right? So GSDP, it takes the overall rate to about 11%, right? So that's our fiscal deficit. Now, the primary deficit is the fiscal deficit minus interest payment, right? So interest payment is, as we saw above, right, nearly 9.5. So the primary deficit drops to 7. So you'll see a large part of our deficit goes towards funding the interest on the previous borrowing, which means we are borrowing to pay interest on previous borrowings. And India is not an exception. Most emerging economies are in a similar situation. Now, a connected point here is the sourcing of internal debt. See, the government is planning an additional 4 lakh crore borrowing over the previous year. So what this means is that there will be a pressure on the yields, of government bonds, which means the government will have to pay more to borrow, because the government, like other lenders, corporates, will have to go to the market and borrow money, right? Now, government borrowings are safe. So if you see government bonds, the government, you'll see advertisements. If you're using any online brokerage accounts, you will see that a government bond is for sale, right? Now, this is how the government raises money, and these borrowings are safe, and it is natural that it will attract lenders first, right? Safe instruments. What may happen is that it will crowd out corporate sector, which will now have to pay more than what the government offers for the additional risks that the lender bears. And it is interesting to see how these bond rates play out in the coming months. Right? Finally, the government is also planning to issue sovereign green bonds. Now, the money raised from this will go into projects that help reduce carbon footprint. Right? So that, in a nutshell, is your revenue, disbursements, and the deficit, also the deficit financing. Now, the final part, I know we have little time left. I'll do my best to complete this. So the final part, and actually the most exciting one for me, is the macroeconomics of India. Last 2 years have been tough, not just for India, but countries across the world. The government of India's plan for 21 was to invest significant amount of money in creation of infrastructure, which would put money in the hands of people, and they would put money back into the economy, right? So it would boost medium-term demand. If you see this graph, what I've done is have compared India's growth with the other countries. And when we look at India's, sixth or seventh now, right? The number keeps going up or down slightly. But if you look at China, Germany, France, United Kingdom, Japan, and the United States, how is India performing, right? If you see 2020, all countries went into negative, so that's negative growth, right? But if you look at 21, India stands out clearly. That's the blue color area graph that you see. It's 9.1. And if you see 2022, again, it's 8.25, right? So the Indian economy is expected to witness a real GDP expansion, right? Both in 21 and 22. Now, the good thing is that the economic impact of the second wave was smaller. Of course, the health impact was far more severe, but the economic recovery was faster, right? So we will see India grow very fast over the next 2 years. Manufacturing sector will also witness significant growth despite the contraction last year, and we are in a good position to witness at least 8 to 8.5% growth in 23 as well. So massive numbers, right? In addition to GDP, what I usually do is compare the GDP per capita. Now, while GDP numbers look very, very promising, GDP per capita gives a very different picture. Now, if you see this number, we are at the bottom, right? Don't mistake that line for the axis. It's actually India's per capita. That is a dismal $2,300, right? Now, you compare that to the US, which is the largest economy, it's 30x. If you compare that with China, that's the area right on top. That's about 5x, right? So there's a vast gap there, not just due to our population, because China would be in a similar situation as ours, but fundamentally we'll have to do something different. The other comparison that I usually do is the Human Development Index. Now, this is a synthetic measure of countries' progress in health, education, and economics, right? To basically all put together. Unfortunately for us, we are a distant 131, right? Germany is 6. China, amongst these leading countries, is 85, right? So we are a distant 131. So hopefully these numbers will also improve as the GDP picks up. Now, one question that you might have seen frequently is, are we witnessing a V-shaped growth, right? Now, while the graph shows India is indeed witnessing a V-shaped recovery, that's this V shape basically, right? Between 2019 and 21, you see the shape V. Now, while we are witnessing this on a graph, the reality is very different for its two classes, right? The rich and the poor. And the cliche, the gap between rich and poor has widened globally, not just in India. Now, what I've done is I've gathered some information from an inequality report, that is published by the World Bank, one of the divisions of the World Bank. Numbers are they're quite crazy, right? As far as India is concerned. Now, the top 10% of the richest people, they doubled their income during the pandemic. 99% of the global population has seen a decline in their wealth. As far as India is concerned, billionaires in India rose from 102 in 2020 to 142 in 2021. and the same time, nearly 5 crore Indians have slid back into poverty. India's poverty line is also significantly lower than the USA, right? I'll come to that graph shortly, but just looking at the distribution of wealth and income, the bottom 50% annually earn 53,000 rupees income. The top 1% earn 44 lakh. Gap is massive. When it comes to wealth, bottom 50% have 66,000 rupees of wealth creation in a year when the top is 3.24 crore. So this gap is increasing not just in India but across the world. The point about the poverty line is important. Let me just go back to that. 1, 2, 3. Yes. So India's poverty line is also significantly lower than the other countries, right? You see but if you see the size of the bubble, it's quite large, which means there are a lot more people who are poor at a poverty line which is significantly lower than the other countries, right? So the poverty line, is pushed up slightly. This bubble basically grows in size. So that's important. If you look at USA, the poverty line is $12,000. Of course, it's not a one-to-one comparison, but just to compare the size of the people who are living below poverty line. In fact, 20% of India's population lives below poverty line. So while V-shaped recovery looks good, GDP numbers look good, unless this gap is narrowed down, unless this population is pulled out of poverty, these numbers will not mean much, for a large part of our population. Let's turn our attention to the markets, right? Let's see how the stock markets performed last year. Now, the benchmark indices, that Sensex and Nifty, they grew by 17 to 18%. The Sensex actually scaled 60,000 sometime in October 21. Nifty was amongst the best performers in the world, and it was second best only to the S&P 500 US. Nifty grew by about 18%, and the S&P by 20, I think. However, the Indian equity remains significantly expensive, right? And this is not just looking at the earnings per share for the year 21, but also the possible earnings, the projected earnings in the next year. So we look at a trailing PE. And if you look at India, it is 26 times of the EPS, earnings per share, right? But emerging markets are at 14 and 19. So very expensive stocks to buy. You would have realized it. Most of them have entered the stock market. So you would see that the stocks are getting expensive. You will also see this measure called India VIX. Now, India VIX is a measure of volatility, meaning how volatile is the stock market. You'll notice that in the first lockdown, it went up sharply. It's then fallen. Second lockdown wasn't that bad, and it's now dropping. It's going up now again, but this is 2021. IPOs. Some of you might have put money into IPOs. There are a lot of IPOs coming up even in 2022. Now, if you see the period up to November, 75 companies and a lot of new age startups listed their shares, and almost 90,000 crores raised from these markets, and this is the highest in the last 10 years. Liquidity and lower earning potential of other instruments, FDs, government bonds, has created a huge oversubscription in the retail sector and HNI. So these stocks have not just the companies have not just raised money, but there's been a huge oversubscription, right? So a lot of people are interested to enter the stock market. The market cap as a percentage of GDP has shot up significantly. The last time it was this high was in 2007, 2008, when it was 150. It's now climbed to 172. So this clearly indicates the overheating of stock prices, right? And and a lot of liquidity also in the market. Now, central banks have started to pull out money from the market. You would have read this in the news. It's happening in the US. It will happen in India. When the liquidity drops, you will see this number falling. One very good aspect of this number, however, is that the formal economy is picking up. So COVID may have exacerbated the swing as businesses say, because businesses in the informal sector have been impacted. Formal sector has picked up. So that's a positive news, right? What about COVID, right? Now, are we on the recovery path? What do these numbers say? If you look at India alone, how have we done? Now, vaccinations have proved to be effective, and countries across the world have rushed to administer at least one dose. The liftoff was patchy in India, but we have done marvelously well in the last year. If you look at India alone, India is at least 69% of our population has received a dose. If you look at 2 doses, it's about 53%. And India, in absolute terms, has administered the highest number of doses compared to any other country in the world. I'll pull up a graph here. It's very interesting. And healthcare workers deserve special praise for that, right? So nearly 70% has received one dose. So that puts our economy back on track. And but I think this may have contributed to soften the impact of the third wave. So we have not only administered doses efficiently within our country, we have also exported them. So this is Bharat Biotech and the countries where we have exported our vaccines. And this is the graph, about the absolute numbers. So if you see, India is way ahead of Germany, US, France, or UK, right, in absolute terms. So excellent work, as far as vaccination is concerned. And and the retail mobility has improved. So this is one interesting graph that I found about the way the visitors to a public transport, a transit station, was. So if you look at this is the numbers across the world, it was -75 to -50 in India. This was during April 2020. The number looks very good now. It can be better, of course, but the number's picking up. So November 21, this was closer to 25 to 50%. So which means people are traveling again, right? They're back. And railway traffic, air passenger traffic are inching back to pre-pandemic levels. You will see that of course 2022 there will be some impact, but we should be back to pre-pandemic levels soon. Fuel consumption is nearly back to pre-pandemic levels, and they've contributed significantly to tax revenues. One very interesting graph is the UPI transaction. Now they've lifted off basically from April 2020. If you look at the comparison between the UPI and the ATM transactions, people could not move out, so they used UPI. And from April 2020, the first lockdown, the growth has been significant, right? It beaten ATM transactions by large margin by 21. Next, we look at the government consumption, basically spending by the government on goods and services, and how these numbers stack up. It's important to know because ultimately this is money that goes into road, railway, bridge construction, puts money in the hand of people, that comes back to the economy. So that's how a country grows, right? One thing that's worrying here is the private consumption, money that you and I spend, right, to buy stuff. You buy a car, you buy a house. This is private consumption. Unfortunately, in 2021-22, despite this growth, the recovery is only 97% of the pre-pandemic level. And this might be because a large portion of the household income has reduced during the COVID period. A larger population earning a lesser amount, and the amount has taken a beating, right? Which is why private consumption may have dropped, but maybe in 23 things are going to change. This is an interesting graph. Again, it's about the capital that is formed, right? And it's as a percentage of the GDP. 2021, 21, 22 will see a significant amount of money being invested in real assets. So hopefully from here onwards, though the number as a percentage of GDP is lower, and in absolute terms, it is a much larger chunk, right? So hopefully things should be better, for the next year. Now the job market, how did we do as a country? Now unemployment rates rose to alarming levels in the pandemic year, right? That's nearly 25%. The rate is now largely under control, though the data for 21 indicates 11% unemployment rate. Current data is a more optimistic 7%. That's as of as of the month of Jan. What is a little worrying is though the labor force participation rate. Now, what this means is the sum of unemployed and employed people, right? The population that's actively looking for a job or is already in a job, right? Now, this number has been steadily falling, a drop of 5% from 2010 to 2020 means nearly 6 crore people have discontinued, or they've moved out of the job sector. One good news, however, is that more people are joining the formal sector, like I mentioned. There is a rise in the employee provident fund subscriptions. The new subscribers have gone up significantly from September 21 to November 21. If you see the number, it's nearly 6x, right? So which means we're adding a lot more people into the formal sector. The next graph is about the Manrega, right? The pandemic induced migrations increased the demand for Manrega jobs in the rural countryside. Now, the demand in 21 is slightly lesser than 2020, but it's still much higher than 2019. But it comes as a surprise that the government has decided to cut down the budget for Manrega by nearly 25%. So not sure about how they're going to make up those numbers. Final comments on the reverse repo rates, and this is going to impact the money in the market. It will also impact significantly the stock markets for the year 2022. Liquidity had been in surplus during pandemic years, and this was basically due to a reduction of the repo rate. Now, repo is the rate at which the RBI, central bank, lends, and reverse repo is the rate at which they borrow, right? Lowering the rate means banks have a greater incentive to deploy funds in the market, right, rather than keep them with the RBI. So the rate drops, more money in the market. Rate goes up, lesser money in the market. Now, countries across the world are tightening liquidity, and you would have seen that the stock markets have tumbled since the beginning of 2022. Inflation seems high, but it's under control. There has been a lot of talk about petrol prices, and I collected data for the last 3 years. You'd notice that the price of crude dropped sharply in April 20. That's the first lockdown, basically the rise of pandemic. And though the crude price dropped, petrol prices did not drop. So they were steady, and they've only increased. Hopefully, this would have contributed to the tax revenues that we earned. Last one on the NPAs and the credit growth. MSMEs are doing reasonably well. They could do better, of course. The numbers of loans that MSMEs were eligible for has grown moderately from 3.61 lakh crore to 5.94. Larger companies are doing much better from 15 to 22. NPAs, the good thing is they've dropped sharply. So we hope that this trend continues. The government in this budget has extended the emergency credit guarantee line from 3 lakh crore to 5 lakh crore. So that's good. The banks may loosen the purse for any application that the MSME makes. So that is it. Thank you for your patient hearing. I'll be happy to take your questions. My email is here. I'll be sharing the presentation. Also got my LinkedIn link. Let me stop sharing and take questions that you may have.
Pavan, I think our audience was not able to find the questions on LinkedIn.
Mm-hmm.
They didn't join in on LinkedIn, so they joined us on YouTube as well as Facebook. So this is to the audience. You can ask your questions there as well. We will be able to receive it on the right side here. And please feel free to just send it our way and we will pick those questions up. I'm just going to check our...
Yeah, I'll drink a little bit of water.
Yes, please. Pavan, a question. How does this budget, right? It is regarding the budget. This budget affect me as a single person business. So somebody who runs their business alone, how does it affect them?
Sure, not much really. The good thing is that the rates have not been increased, so that's a positive aspect of it. Rates have not dropped. The government cannot afford to bring down tax rates, so at least they have not tinkered. They have not increased it. They could have increased it. They have not done it. Of course, from a single business point of view, the slide that we covered on 37, 43B, and 40 are important. These are changes, and also the new withholding tax rates. Now they become important, right? Also, if you're a small business, you fall under the MSME category. The government extended the emergency credit guarantee line scheme to 5 lakh crore. So you might be eligible for an extended credit window. There's a list of eligibility criteria, of course, but you please reach out to your bank in case you're eligible. You may get a little bit more into your account to help you run your business.
Absolutely. I think, Pavan, no other questions as of now. This is to our audience. We don't know if this is going live on LinkedIn. I have a feeling it has not gone live. So what we will do is we will upload the same link. We have it on YouTube. We will upload the link here on LinkedIn. You can watch it anytime. And as Pavan said, if you have any questions, you can definitely reach out to him, or we will collate your questions all together and have them answered by Pavan. I think, Pavan, if there is nothing else, any closing points if you would like to share with us? Okay, 1 second. Sorry. Somebody did comment here. Thank you so much. So it's any change in aspect for startups which are less than 5 years old? Again, I think
no changes. No changes. They've extended the tax window, actually incorporation window, not the tax window. So they've allowed startups to incorporate up to 31st of March 23 now to register as eligible startups. Hopefully, if they satisfy the criteria under ATIAC, they'll be eligible for a tax window.
Absolutely. So any other questions from Facebook or YouTube, please type it right now. We will pick up questions. We will be closing by 5. So before that, if you have any questions, please send it our way. Thank you so much. So I'm just... I don't think there are any more questions, Pavan. I
Okay.
don't want us to. Okay, thank you so much for this. I
Anytime.
thank you to our audience as well. As mentioned, if you have any questions, Pavan will be able to answer them even on offline here. Okay, another question. Just as
For 22, and is it election oriented? I'm not sure.
okay, that might be
It
a
is
little.
not. The reality is it is not, which is good.
Yeah, so the answer for that is it was a good budget. So yes, thank you so much, Pavan.
Okay.
We might keep getting these questions, so we will have to close right now. So
Sure.
thank you so much for being a part
Thanks
of
so
this.
much.
Thank you to our
Bye.
audience as well. Bye.